Hey everybody, if you've been following us for a while, then you might remember our video from a few years ago where we talked about why the one-time close VA construction loans were not a great choice. I might even have called them bad at the time, but times change, literally and figuratively. So I wanted to take a look at how these one-time VA construction loans, one-time close, how they work today and whether or not they're still a bad idea. Now, you might recognize my Red Friday shirt. Every single Friday we wear red here. I invite you to do the same. It's a way to say thank you to the men and women of the military, active, retired, veterans. Just please do it for us. If you want some red clothes of your own, we call them swag. If you want your own, we also have YouTube videos out there that tell you how to get your own red swag mailed directly to you. And last thing I'm going to say about red today is down there in the bottom right corner of your screen, you should see a red subscribe button. It might say like, it might say follow, whatever it says. Click it, do it, find out a way to follow us so that every single time we are putting out new content like the one you're watching today, you're one of the first to know about it, okay? To start, you're probably wondering what a one-time close VA construction loan even is. So I want to talk about that today. Basically, a one-time close VA construction loan is a single loan that covers both the cost of building the home and the long-term, in most cases, 30-year mortgage. Okay, so it is the cost to build. It gives you the loan that's required to build, right? Buy the lumber, dig the hole, pour the foundation, all of that, construction loan. And it is the, what we call in the industry, permanent financing, which would normally be like your takeout loan or your 30-year loan. You don't have to get two of them because you're doing them one time. You're closing one time on both of them. So traditionally, most people would go get a construction loan, and then after the home was done being built, they would go get a VA loan, in your case, if you're a veteran, or a conventional or FHA loan to pay off the construction loan. However, with a one-time close construction loan, the one I'm talking about today, you don't have to go through two different loan closing processes. That's why it's called a one-time close. Now that you know what they are, let's look at how they work and what the process is to get one in 2022. Okay? Step number one, look at that. I'm going to save some ink or whatever the heck's in these dry erase markers. I'm going to keep the one right there. To start, you'll need to find a lender who does one-time close VA construction loans and get pre-approved with them, okay? Start by finding a lender. Got to find a lender that does them. I'm going to give you a little hint. Though we didn't used to do them, and you've probably seen some videos out there where we said we don't, we do now. So make sure we're one of those lenders that you look to for your VA one-time close construction loan. A lot of VA lenders are doing them, even though in the past they weren't. Here at Low VA Rates, yep, as I've already said, I just got to say it twice, maybe even three times so that you guys realize we are now doing them. So go ahead and contact us and put us in that group of lenders that you're looking at for your loans. Matter of fact, I want to plug one of my favorite loan officers here at Low VA Rates. His name is Russell Murphy. You can find Russell or Russ Murphy on our website, right? You can go and click around, find our team, find him, reach out to him. He has been the big leader at our company in bringing back this VA one-time close construction loan, and you'll love working with him amongst other loan officers at our company. But I thought it was very, very important to make sure I plugged Russ out there. He's doing lots of these right now. Second step, okay? VA approved builder. Okay? Oh, VA approved builder. You got to find one of those. Russ can help you find one. A lot of VA lenders can help you find one. But in order for the VA to guarantee a one-time closed VA construction loan, the VA requires that you're working with a VA approved builder. If a builder is approved by the VA, they will have a VA builder ID number. Now, if you have a specific builder in mind, but you're not sure if they're VA approved or not, you can use the link in the description box below this video to go search for them. You can also use that same link to search for all the VA approved builders in your area. Just leave any optional fields blank. that you don't know how to fill in. Now, if you find out that the builder you want to work with isn't approved by the VA, Russ can actually help with that also. It only requires 4 documents, which he's going to be able to help your builder find and get organized, and then we'll help you submit that information to the VA. Russ will also send the builder's information to our investors or our lenders for approval in their system at the exact same time, which simply helps expedite the process. Finally, once everything with your builder is settled, you'll then need to work with them to come up with the construction plan and the cost to build estimate for your home. I want to get into the third step, okay? This one is also very important. Step number 3, you need to officially apply for your one-time closed VA construction loan with your lender of choice. Now, you started up here, right, with looking for a lender, making sure that you found the right lender. When you're down here, hopefully you've decided who it is, you need to apply. You need to apply for the loan, okay? Once you have your plan and your estimates ready, you can turn all of those into your loan officer. They're going to then review your application along with the documents, and they're going to submit them to processing and underwriting. If you found more than one lender who does these one-time closed VA construction loans, you'll want to do this step for each one of those lenders so that you can then compare their rates and their other loan terms and details. Step 4, that's what you're going to do on step 4. You are going to close on the loan and start building your home, okay? So close the loan. Unlike a normal mortgage where you close and then you move right into the house, this loan you close on, the house doesn't even exist other than on paper, right, and plans. So the closing doesn't mean you move into your home, you close, and then you start building the home. So after you've made it through underwriting and you've received your clear to close, that's when it's time to go in, sign all the closing documents just like you would have done on a normal loan. In addition, if you don't already own the land, not many people know this, but you can use this one-time closed VA construction loan to finance as part of the entire loan, product, the land. And you can do all of that at the time of closing. So you could wrap up the lot that you're buying, the construction loan, and the permanent financing or takeout loan all in one closing. Now, with the loan closed and the funds available, your builder, his contractors, subcontractors, all of them can start construction, because during this time, your builder will start drawing. Through their draw administrator, they will handle that entire process, including things like I need money for inspections, and I got to pay people for work once it's been completed. That's all done as part of this process. After construction is completed, then you'll start making mortgage payments, just like you would on a normal loan, made up of principal, interest, property taxes, and homeowner's insurance. Now, this can be a huge benefit because with the traditional dual close construction loans, where you have your construction loan and then you go and you close on your permanent finance or takeout loan, you'd be making payments during the entire construction process. There are some situations, because I've done a loan more the traditional way, where during the construction process, this particular lender did not require me to make mortgage payments. All of the interest was being deferred, but that's not always the case, right? So just keep that in mind. Let's talk about why I've begun to change my tune, and now I believe is a good time to look at doing a one-time close VA construction loan, where maybe 3 or 4 years ago, I was telling you something different. If you've ever seen that last video, I was pretty adamant against doing VA one-time construction loans. At the time, the main reason why I was against it was that it didn't make as much financial sense, because we were in a market where most of us thought interest rates would be dropping. And guess what? They did. Maybe not the entire time, but the trend was downward. Back then, if you locked your rate in on your one-time closed construction loan, there was a good chance you would have missed out. By the time your home was completely done, you'd be stuck at an interest rate that was higher because interest rates started coming down. So the dual closed construction loan option, if you would have done that, you were able to lock in a lower VA rate once your construction was done. However, guess where we are now in 2022? We're in a rising rate market, and we think we'll be there for the foreseeable future. So a one-time VA close, construction loan, makes more sense in my opinion today than it would have a few years back. Why is that? Well, rates are expected to rise significantly in the next 9 to 12 months or even further. So right now it might be worth locking in. Even though rates have gone up, they're still lower than where we expect them to be a year from now. Lock in now before rates go even higher. Because even though it's higher, there's pretty good chance it's still going to be lower than what rates are going to be a year or a year and a half from now. So now you're protected in the case that interest rates continue to go up because you've already locked in. Now, let's just say rates do happen to magically go down by the time you're ready to move in. Some of these construction loans have ways that you can float your rate down and come close to the market rate. Okay, we'll do another video on float downs another time. Another reason I didn't recommend the one-time closed construction loan a few years ago is because they were much more difficult to do. We didn't have many loan officers here that were that focused on them because they were very focused on the streamlined refinances. And we don't ever like to give our borrowers, veterans or otherwise, a less than perfect experience. And we knew that we would struggle doing them. However, like I said, Russ Murphy, okay, he runs our Texas branch. He's taken it upon himself to become the in-house expert at doing these, and he's having lots of success. So it means the process is much easier and it's less frustrating than it would have been just a few years ago. So as a company, we love to give our borrowers options. Then we let you choose based on your education, through our videos, based on your needs and your experience. This is just us coming back and saying the VA one-time closed construction loan might be an option to start considering. Okay? For some of you, it might still be better to do the dual close where you close on your construction loan and then you close on your permanent financing. So let's just sum it up, okay? I don't know if I'm going to use the board or not, but I always like to just, as I transition into the end of the video here, I like to have a nice clean slate. In case something important comes up, I want to write it down. In summary, in today's environment, I, Eric Campbell, president of Low VA Rates, I'm not as opinionated against the one-time closed VA construction loan. I don't necessarily think it's a bad idea anymore. In fact, depending on your current situation, it might be your best option, right? It may help you build your dream home and lock in rates before they continue to go up even higher. So if you're thinking about building your own home, but you're not sure if a one-time close or a dual close construction loan is right for you, I want you to do a couple of things. Number one, I want you to give Russ Murphy a call. His number is also going to be down in the box below, but his direct line is 512-499-2009. And since we can offer both options, we'll make sure that Russ or anybody else that you speak to explains both options for you and determine which one is best for your personal needs. Thanks for watching.